Bollinger Bands Breakout, more than half of signals win. We ran 8,136 signals across 477 Nasdaq stocks. Win rate, 79.0%. Average trade, plus 4.51%. This strategy uses a 1.5 to 1 reward-risk ratio, a 200-day EMA trend filter, and a swing-low stop-loss. It sounds clean. The data tells a different story. Here it is. Bollinger Bands wrap a moving average with a volatility envelope. The upper band sits 2 standard deviations above the 20-day mean. The lower band sits 2 standard deviations below. 95% of price action normally stays inside the bands. When price breaks above the upper band, that is the signal. But raw breakouts have a low win rate, so this strategy adds 2 filters. First, price must be above the 200-day EMA. You only trade breakouts in an established uptrend. Second, a defined stop-loss at the recent swing low. Take profit at 1.5 times your risk. The setup is mechanical. You either have an edge or you do not. We ran the data to find out. Before the results, the fine print. These are 477 Nasdaq stocks still trading today. Delisted and failed companies are excluded. Survivorship bias is real. 6 years of daily data, January 2020 to December 2025. Bollinger Bands, length 22 standard deviations. Trend filter, EMA 200. Stop loss, lowest low of the past 10 bars. Take profit, 1.5 times the risk above entry. No commissions, no slippage. 8,136 total signals. Here is what happened. Win rate, 79.0%. More than half of breakout signals hit the take profit. Average winning trade, plus 8.5%. Average losing trade, minus 10.61%. The reward-risk ratio is baked in at 1.5, so winners are structurally larger than losers when the strategy works. But with only 79.0% wins, every losing streak cuts hard. This is not a high-frequency edge. It is a selective, trend-following setup that needs the right market conditions. Average return per signal, plus 4.51%. Every month on Patreon, we send the letter. Our top 5 stock picks with full technical analysis, social sentiment, news context, and fundamentals. No cherry-picking. Verified returns published in advance. Join the community, link is in the description. This is the distribution of 8,136 Bollinger Bands breakout trade returns. The losses cluster tightly on the left. The built-in stop-loss caps most losing trades below 15%. Average loss, minus 10.61%. The right side tells the story of the winners. A fixed reward-risk ratio means winners cluster around the take-profit level, not a long, smooth tail like pure trend following. This is a mean reversion-aware breakout, not unlimited upside. The edge lies in the win rate and consistency. Subscribe to Backtest Lab. We test a new strategy every single week. Here are the 5 biggest winners across all tickers. Goldfields Limited American Depository Shares, GFI first, up 11x. Vistra, VSD second, up 10x. Aploven, APP third, up 10x. Targa Resources, TRGP fourth, up 956%. Steel Dynamics, SDLD fifth, up 896%. These are high-momentum names with strong uptrends. The EMA filter kept the strategy out of choppy markets and into sustained moves. Now let us see how the strategy performed on QQQ itself. QQQ, the Nasdaq 100 ETF. Here is how Bollinger Bands Breakout traded it over 6 years. Green triangles are buy entries, price closing above the upper band with the trend filter active. Red triangles are exits, either the take profit or the stop loss. The blue line is the EMA 200. The strategy only fires above it. The upper and lower bands show the volatility envelope. Notice the clusters. Breakout signals appear in fast, directional moves. In sideways markets, the strategy stays flat. That is the EMA filter doing its job. Now the portfolio result. $10,000. Strategy versus buy and hold. Same start date. Gold is the Bollinger Bands breakout. White dashed is passive buy and hold. By the end of the period, the strategy underperformed buy and hold by 155.8 percentage points behind buy and hold. The flat stretches are periods where price was below the EMA 200. The strategy sat in cash, protecting capital from drawdowns while the benchmark continued falling. The sector data reveals where the edge is strongest. Sector breakdown separates the winners from the losers. Real estate led with the highest win rate, 90.0%. Finance came second at 87.4%. At the bottom, technology, only 69.2% win rate, and plus 5.25% average return per trade. By average return, basic materials came out on top at plus 6.94% per signal. Bollinger Bands Breakout thrives in high-volatility sectors that trend. It struggles in defensive, low-volatility names where bands stay narrow. Filter by sector and the edge sharpens significantly. Now, the final verdict. Bottom line. Bollinger Bands Breakout has a 79.0% win rate across 8,136 signals. Average trade, plus 4.51%. The edge is real but conditional. It works in trending markets with momentum stocks. The EMA filter and defined stop-loss are non-negotiable. Without them, the raw breakout signal is nearly random. 2 things to remember before live trading. 1. Subtract commissions and slippage, at least 5% off every return shown. 2. Survivorship bias inflates these numbers. Failed tickers are not in this data set. The edge is there, especially in trending large-cap technology names. Use it as a structured, rule-based setup with proper position sizing. Subscribe, like, and leave a comment with the strategy or ticker you want tested next. Full results and the backtest script are on Patreon, link in the description.